Hello and welcome to Wall Street Signal, your go-to weekly briefing on what's next for the U.S. stock market. As we head into Monday, the major U.S. equity indices are poised for another active session, record highs in sight, strong earnings across key sectors, yet important risks remain on the horizon. Today we're breaking down exactly what you need to know going into Monday, what might drive the market higher, what could hold it back, and where the most interesting opportunities could emerge. Let's get started. First, let's recap where we stand. The S&P 500, the Dow Jones Industrial Average, and the nasdaq Composite have recently reached or approached all-time highs, supported by strong performances in industrials, financials, and big-cap tech stocks. Analysts at Charles Schwab note that while technical indicators remain bullish, volatility may increase heading into a week filled with major catalysts and data releases. On the other hand, valuations remain stretched, bond yields are creeping higher, and lingering trade and geopolitical tensions continue to weigh on sentiment. All these factors combine to set a cautious but optimistic tone for Monday's open. Here are the main events and themes to watch as the new week begins. First, corporate earnings. Results from major technology and industrial companies are still being released, and any unexpected miss or strong beat could quickly move the markets. Second, monetary policy. Expectations around the Federal Reserve's next moves remain a central focus. If the Fed strikes a dovish tone, risk assets like equities could extend their gains. But any sign of renewed hawkishness could easily trigger selling pressure. Third, global trade and geopolitics. Renewed discussions between the U.S. and China remain in the background, and any headline, positive or negative, can influence sentiment within minutes. Finally, commodities and safe haven flows. Gold and other precious metals have been under pressure. While yields on the 10-year U.S. Treasury are holding firm, both serve as key indicators of how investors are positioning themselves ahead of Monday's trading. Let's map out the upside scenario for Monday. If earnings continue to surprise to the upside, particularly in industrials, energy, and technology, and if the Fed delivers a more accommodative message, we could see a strong open on Wall Street. In that case, the Dow and S&P 500 might test fresh record highs early in the session, while the nasdaq could rebound after last week's weakness. Industrials and energy sectors are already showing resilience, driven by renewed infrastructure spending and steady corporate investment. If upcoming earnings from those areas confirm this trend, they could provide additional momentum to the broader market. And if gold and metals remain weak while investors rotate capital toward growth sectors, that could further accelerate the upside move. But of course, not everything points upward. There are clear risks heading into Monday. First, if the Federal Reserve suggests it might raise rates again or delay any potential easing, bond yields could spike, a scenario that tends to pressure growth and tech stocks. Second, geopolitical uncertainty. Any negative surprise on the international stage, whether related to U.S.-China trade, Europe, or the Middle East, could quickly dampen investor confidence. Third, weakness in metals and other safe haven assets may indicate growing caution beneath the surface. The fact that precious metals have been sliding could mean that investors are quietly hedging risk or trimming exposure ahead of Monday's open. Historically, Mondays have been tricky sessions. The S&P 500 has opened lower in several recent weeks when investors turn more defensive. So, the downside scenario would involve a soft open, continued sector rotation, and possibly a test of short-term support levels. So, which areas deserve your attention this Monday? Industrials and energy. Companies tied to construction, manufacturing, and infrastructure spending could remain strong performers if demand stays solid. Technology. After some recent softness, tech remains the market's key swing factor. A strong report or guidance update could quickly reignite this sector. Financials. With interest rates edging higher, banks and other financial institutions could benefit from wider margins. Power metals and mining. Their recent weakness signals investor caution, Another drop could confirm a risk-off tone. The 10-year U.S. Treasury yield. If it rises sharply, stocks may struggle. But if yields pull back, it could support another leg higher in equities. Each of these sectors will help set the tone for Monday's session, and possibly the week ahead. So, what's the bottom line heading into Monday? We enter the week with what could be called a cautiously bullish setup. The market's underlying momentum remains positive, but the margin for error is getting thinner. If earnings, economic data, and Fed communication all align, Monday could deliver another record-setting start. But if any of these pieces falter, we could just as easily see a softer open or choppy trading. Here are the immediate things to monitor. Movements in the 10-year Treasury yield, any Fed statements or policy hints, weekend trade or geopolitical headlines, early reactions to corporate earnings before the opening bell, and of course, key technical support levels on the major indexes. Thanks for tuning in to this Monday market preview on Wall Street Signal. If you found this update helpful, please hit the like button, subscribe to the channel, and turn on notifications so you don't miss our daily market briefings. We also love to hear from you. Drop a comment below and tell us what you'll be watching as the markets open. This has been your Monday Outlook from Wall Street Signal. Have a successful trading week ahead.